everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that no trades are guaranteed to profit. Any one trade could obviously bring profits or go the other way. So you want to manage risk in a way that makes sense for you. And we have some tools built into our web trader and app that make the risk management side of things quite a bit easier. If we find some trade ideas to simulate, we'll go through how the risk management features work in the order window. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, I think it's important, since we're talking about fundamental analysis, it's not always a holiday, but today happens to be one in the US and some other places. So what we can look at is the effect that has on our trading hours. And in general, on holidays, there tends to be a lower volume of trading, which can affect the movements on the charts. And then also, you have to pay attention to the hours of different markets. And so this is a fundamental aspect of things that sometimes traders don't think about. But as the holidays approach and occur, you should be aware of these changes. And so if we go under trading info and then go to holiday hours, we have a page dedicated to this part of things. And if you click where it has a general few paragraphs about holiday hours, and if you click where it says click here, it will load the current month's holidays as a PDF document. And so what we see here then are the hours outlined for the month that include holidays. And so what we're looking at here, left this month, we have Thursday and Friday. So today and tomorrow, being Thanksgiving holiday in the US, it outlines that all of the times are listed in GMT, and you can see which markets that we offer are affected. And you see there's an early close on a number of markets today and tomorrow, and also some markets are closed. Some of these agricultural products, instruments that we offer, for example, are closed today completely, and then have limited trading tomorrow with an early close. So it's important to keep track of these types of things before you start your trading. Really, for the week, for the month, you should check each month using this link on our website. And soon we'll have December listed with all of those early close and holiday affected hours for the full month of December to the end of the year. So just an important tidbit that I want to throw in there about fundamental effects, and holidays definitely can have a fundamental effect on the markets and a direct effect, obviously, on the trading hours themselves. Now, you can find the same trading tools that we're about to use in our web trader, the fundamental analysis tools, also in our app. And you could trade both on MT4 accounts and MT5 accounts on our web trader and our app using these tools. And so if you go to our trading platforms, you'll see that the AvaTrade app is available in the major app stores, Google Play, Apple App Store. You can follow these links or just search for the Ava app in your app store, and you'll find the same signals, the same fundamental news, etc. All of those tools are available in the app, just like the web trader that we're about to use. Now, if we log in here in the upper right corner, we will be in our web trader. Now, there have been some general developments we can talk about fundamentally. So far this week, the US has shown stronger than expected data in terms of housing numbers and other key indicators of the economy. And this data has created some fear on the markets. We saw some of that yesterday with some of the equities pulling down a bit. Some fear on the markets that the US will be more hesitant in lowering their interest rates any further until they see maybe things slow down a bit more. because with housing prices jumping up and demand still being there in different sectors of the economy, giving higher than expected numbers inflationary wise as well in some cases, the fear is that, well, maybe the US can't continue to lower interest rates too quickly until those numbers slow down a bit more. Usually we're happy about those numbers being a little better than expected, showing good demand. But right now there's the anticipation of, will the next rate cuts come or not? And when will they come if they do in the US? And so a bit of fear hit yesterday with some stronger than expected economic data out of the US. That's something to keep in mind. And another big story, a truce was agreed to and started in the Middle East between Israel and the Lebanese group Hezbollah to their north. And so fears of a larger escalating regional conflict that could include Iran and other players in the area have maybe subsided a little bit in terms of those fears in an immediate sense anyways. And so we could look to see what kind of effect that might be having on something like crude oil, which tends to spike when there's Middle East fears, and maybe be a bit more bearish when those fears calm back down. So we'll take a look and see if there are any opportunities there, maybe on crude oil, for example. Now, specific announcements today that we can talk about would be on the economic calendar. And so let's first look at crude oil with what we just talked about in terms of the Middle East, and also understanding that there's been stronger than expected data out of the US, which maybe creates a bullishness on crude oil. So those two things are working opposite of each other, which might be good for finding movements that are stuck between a support and a resistance level. Okay, so let's bring up crude oil and see if maybe there are some ranging patterns. We call that ranging when the movement continues to go up and down, up and down, up and down within a support and a resistance level that it tends to have trouble breaking out of. The fact that today's a holiday, maybe lower than expected trading volume. Also, the fact that there are opposing stories here, one that might drive crude oil up, better than expected economic data out of the US, one that might drive crude oil down, less fear out of the Middle East, that might add to the expectation of ranging movements on the charts. Ranging meaning exactly what we see here in the 2-hour candles, and let's maybe go to 1 hour. And what we see here is a high point, relatively speaking, and a low point that, with one exception here where it spiked up, once it dropped back down in this range, we've seen support at this price, resistance here, again resistance here, again support at this price, again support at this price a third time, and now again resistance at this price a third time. 1, 2, 3, 1, 2, 3. So this is your typical ranging pattern that might occur when you have opposing fundamental news stories that can drive price up and back down, like we've just described, and also maybe the holiday effect, lower volume of trading, maybe less likely to be able to break through major price levels, and so might result in more of a ranging pattern as well. Okay, there's no guarantee to that, obviously, which we discussed in the beginning as we started the webinar, but what we're looking for are potential statistical significance in terms of price movements and patterns on the chart, combined with the fundamental news as we know it, that might put the wind at your back, so to speak. So what I see here is, from a fundamental perspective, for the reasons we outlined, this might continue to range and not have the momentum to go running off huge in one direction, barring any breaking headlines about the truce breaking in the Middle East or some other unexpected headline. Okay, so if we go with what we know right now fundamentally, it seems like a sell looks opportunistic here. We can get our stop loss above this ranging pattern and risk very little because it's right at the resistance level, and take profit can be a much larger take profit down here without having to break the support level. Okay, so we can say take profit, let's say 68.5 even, will come up a little, be less aggressive with the take profit. If it even comes down anywhere near this bottom third, we'd hit our take profit, just retrace what it did in the last 2 hours, and we'd be at our take profit at 68.5. Okay, so we put 68.5 here. And then where would the stop loss need to be? 69.5 would do it. That gets us well above this resistance level right here at 69.5. We could even go a little lower than that, but let's go 69.5 and see how that plays out in terms of risk reward. Okay, we're looking at over 3 to 1 ratio, or approximately 3 to 1, maybe not quite. 3 to 1 ratio, possible profit to risk. Okay, and so we can play around with this stop loss and say we don't need to be that far above this resistance. If it breaks above it and even hits 69.45, then it would make sense to get out from a technical perspective. So whoops, I put the wrong, change the take profit instead of the stop loss. So let's say 68.5. And this one I was trying to change the stop loss to 69.45. And so that then lowers the possible loss quite a bit. And now we are looking closer to 3 to 1 ratio here, or better for stop loss compared to take profit. Now what we look at is we say, what about the risk side? It's saying I could lose 1,500. Well, that's maybe a larger chunk than what I want. So depending on your risk tolerance, do you want to risk 2% of your account, 0.5%, 1%? So you should have a number in mind. Once you get the technicals set up, I've got my entry point, my stop loss, everything set up based on the technical analysis. My directionality is determined by the fundamental news. And so now that I've got my stop loss where I want it and my take profit where I want it, now I can start to think about what trade size is correct for this setup. So if I go to, say, 3 lots, now I'm looking at a risk of 660. If I go to 2.8 lots, now I'm risking 644, 2.6. Okay, now I'm under 600. That's close to 1%, a little over 1% of my account risk to go after over 3%, better than 3 times that potential profit. So we're at a better than 3 to 1 ratio now with this setup. And so if I like what it looks like, then I'm ready to go. And so we've covered all the aspects of taking a trade. We've looked at the fundamental analysis, the fundamental news, and it was more larger geopolitical news, the Middle East situation, and taking a look at what we think the fundamental news might do with the movement in terms of directionality, and taking into account that it's also a holiday with reduced trading volume maybe, and then combining that with our technical analysis to find, is it an opportunistic entry point? And from a technical standpoint, this is a great entry point to short this, to sell on it, because we're just below the resistance level. And if it breaks through, then we can get out with a small loss, and we have a much better profit potential down this direction. And we didn't even push this all the way to the support level at the bottom, and it's still 3 to 1 ratio, even taking profit up well above the support level. Okay, just going back 2 1-hour candles to try and take a profit. Okay, so this is an example of putting together step 1, step 2, step 3, which was fundamental analysis, technical analysis, and risk management to then take a trade that might make sense to you. Okay, and you don't have to agree with this trade. You could look at the headlines and think differently. You could look at the entry point and think differently. But it's the process that's important, that I'm trying to make sure you understand, how maybe you go through the fundamentals, then look at the technicals like we did, and the risk management in the order window, and see if it's right for you to make the trade. Okay. Now, what else can we use for technical analysis? We could have looked at the signal. Okay, the technical signal is there, which is telling us to sell as well. So from a technical analysis perspective, you've got help here from our signal that's saying you might likely sell on this, and they're looking at take profit a little lower, closer to that support level at 68 or even lower, which is down here where we drew that support, 68.2 and lower. So we're in line with the technical signal. We're in line maybe with what we think the fundamental analysis is, and then we worked out the risk management to make sense as well. Okay. Now, where else can we look for fundamental news other than what we might know about the big breaking headlines? You know, we can look at specific instruments, which would be in the market buzz. So if we go to the market buzz found here in this main discovery menu, second one down, market buzz, we can look at any instrument, commodities, indices, currencies, cryptos, if you're in a region where you're allowed to trade, in stocks. So if I want to know, hey, what's going on with, I don't know, Apple? So I come over here, I see it's trending a lot. It's one of the bigger circles in this pictogram, which means it has more mentions that we found online. So I might think, okay, let's see what's going on with Apple or whatever I choose to look at. And just like that, I've got the most up-to-date news that we can find right here at our side, on the right-hand side, to be able to quickly find what's the latest news coming in regarding Apple. Okay, and you know, you might find something that you read here that came out recently that says, hey, I think that's good news for Apple, or you might find something that you think is bad news. And if you read an article that then maybe agrees with the technical signal over here, in this case, Apple's expected to rise over 5%, and you can look at that technical signal and see where are those price levels of support and resistance that are expected to hold, in this case below is the support, expected not to break because it's a buy prediction, and that it might go up towards these resistance levels up here for a take profit. Okay, that's the technical signal. We also have the fundamental news over here that you can read through to see if you agree that the fundamental news is in that direction as well. And there are a number of instruments that might have breaking news, and sometimes you don't see anything big in terms of the news. Again, this one says it thinks price will rise. Again, a tech stock. And if you look through the news, maybe you find something that supports that, or maybe goes against it. You know, I've heard some news, and here it is: Microsoft under FTC radar for antitrust violations. Well, that's kind of bad news. So if there are antitrust violations, you know, that news is just breaking that there's investigations going into Microsoft for antitrust violations. Maybe this is a signal I might choose to ignore, even though the technicals say it might rise. Maybe I find articles that I click on and read through, and you can click the link and read the whole article if you want. It'll take you right to the source of that article. Maybe that convinces you not to follow a signal like this. Okay, the technicals look great, but also the point of this webinar is to say, try and match the fundamental news as well and see if that reinforces the case to take one of these trades, or maybe it works against you and you decide to sit that one out. Okay, so we do have these signals coming into the platform and these trend analysis breakdowns, but I would combine that with the fundamental news so that you feel more confident which of these signals that you want to choose to follow and which maybe you don't. Okay, because these signals are largely based off technical analysis. It's up to you to also do some of the background work before you follow a signal to see what's the latest fundamental news that might affect that. Okay, and maybe I would choose to follow that one of the other signals and leave this one alone, since there's some fundamental news maybe working against this buy signal here. Okay, what else can we look at on this platform for fundamental news? We do have a news feed. The news feed is, where is it? Here. News feed. So here, just above the discovery section, it says news. You click on that. What it does is it tells you the economic announcements that have already come in, the big headlines of the day, summarized per instrument that you might be interested in trading on. Okay, here it's talking about crude oil. I click on it. It's talking about anything to do with crude oil here. And here's where you could get right into the order window. Whatever's related to the information then is listed down here to potentially buy or sell on. So this summarizes things for you without you having to find the actual article in the Market Buzz or without you going to the economic calendar. It summarizes what is known and ties that to a certain instrument. So you can look here as well in the news feed for a quick summary of news related to different articles. Here's another popular one, gold. What's the latest information on gold? You can read about it here, okay? And if that's not enough, let's go to the discovery section again. We can go to the economic calendar itself, and we can actually watch the announcements come in. If you can match up your trading schedule and available time frame to be available to trade when the announcements come in. We have some special features built into our economic calendar that allows you to analyze how did the different currency pairings move related to these announcements in the past. If the announcement comes in better than expected or worse than expected, you can use the tools in our economic calendar to then analyze the movements on the candlestick charts as to which way did the movement go and how far after those numbers came in the past. And so if I then choose today's date, for example, and you can choose the countries you want listed in the calendar, okay, and the level of announcement importance, high, medium, and low. I tend to go with the high ones the most. Sometimes I'll look at medium level announcements. The low importance announcements I tend to leave off because they don't evoke as much movement on the charts typically. Now, if I look, we still have today a couple high level announcements coming in. These are out of Germany. And so let's look at the inflation rate year over year and month over month and see what effect has it had in the past on movements. So we can pick any currency pairing with the euro. We can leave it on Euro USD. We can pick different time frames after the past announcements to see how did the currency pairing move. And I'll leave it on the 4 hours for now. And we can qualify how the numbers came in. So if I say, if these numbers come in above forecast, okay, so inflation rate higher than expected. What happened in the past? USD pulled the euro down 67% of the time, 2 out of 3 times. So if each time when these numbers came in higher than expected, if I sold, I would have won twice potentially and lost once. Okay, and you might say, yeah, but that's after the numbers came in, I'll miss the movement. What we see here is many times, you know, in this case, it went almost 50 pips after 4 hours, okay? The largest drop here was 54 pips, okay? In the first 5 minutes, all 3 of them were up with only 3-4 pips movement in the first 5 minutes. So it's not like you didn't have time to see how the numbers came in and then place your trades. And if I know the majority of the time the euro weakens when inflation is high, that makes sense, by the way. High inflation means the value of the currency is dropping. You need more of it to buy any one thing. That means weak currency. So when inflationary data is high, fundamentally speaking, it might make sense for the currency to weaken. But even beyond that, we can see in the data that that just happens to be what happened. Statistically, 2/3 of the time, the movement went down after 4 hours when the numbers came in higher than expected on the inflationary data. So in the first 5 minutes, all 3 of them went up. There was a false move on 2 out of 3. So that's important information to understand it, that each time in the past when this came in above forecast, there actually was a false move in the first 5 minutes. And then after 4 hours, 2 of them went down. Only 1 continued up. So you could have had a short stop loss, lost on 1, and had 2 nice profits. Okay? What if this comes in below forecast? What has happened in the past? It looks more mixed. Now, there's a higher percentage that went down, but the size of the movement down and the size of the movement up is pretty even. You know, this one went down, this one went up, this one went up, this one went down, this one went up, up, down, down, flat, and down. And some of these movements up were actually larger than the movements down. So this looks less convincing to me, statistically speaking. It's 63%. It's pretty close to the other percentage-wise, but it just doesn't look as convincing to me visually in terms of the size of the movements as the above forecast situation where it looks more cut and dry. Okay, but that's up to each trader as you analyze the different time frames for these announcements and the percent of the time that it went one way or the other based on how the numbers came in. You decide in advance, am I interested in watching this announcement and trading on it or not? And everyone will have different standards for what they're looking for. Okay, trading is more of an art than a science, but in the end, this is what we call data-driven trading, and you'll make the decision more robotically based on what were those past numbers and percentages. And maybe you're looking for 75% of the time it went one way or the other based on how the numbers came in, and you have a higher standard for qualifying that you'd want to trade on something, and others maybe want 60, 2/3 of the time that it went one way based on how the numbers came in. But that data is here for you to make that informed decision and be able to trade on how those numbers come in. Okay, and we can take a look at any day we want. So over the weekend, you can prepare for the upcoming week and have each day picked out which announcements show the best predictability from the past announcement numbers when they came in. And the larger economies tend to have larger movements. We could look at Germany again here with retail sales and see. Right now, I'm kind of steering away from US announcements because of the holiday. And if we take a look, this came in above forecast 80% of the time. The euro strengthened against the USD. And you can check against different currency pairings as well to see how that affects the percentages. But that's a pretty solid number there. 4 out of 5 times, 80% of the time, if the retail sales came in better than expected, above forecast, the euro strengthened. Now that makes sense too, right? When logically it makes sense in your brain and the statistics back it up, then maybe you have something there. Better than expected sales and the euro strengthened 80% of the time after the announcement with a range movement of over 40 pips. You can check and say, okay, after the first 5 minutes, what was happening? Range movement only 2.74 pips. So you see, if you look at the scale over here, those only went up like 2 pips. Okay, even less. One of them went flying down. And then after 4 hours, they're up 30 pips on average, somewhere around there, 20 to 30 pips climb, with only one that went down. So from 2 pips to 20 pips on a lot of these, or even close to 30 pips within the first 5 minutes compared to after 4 hours. And the predictability here was very high. So again, if these retail sales come in tomorrow better than expected, I know what my plan might be. Okay, I know the distance I expect it might move. I know I probably have the first 5 minutes to look for a good entry point and make my trade based on these past announcements. What if it comes in below forecast? The opposite, right? Okay, worse than expected retail sales. We see the majority of the time, 2 out of 3 times, the euro dropped. Near 34 pips. Only once went up, and the one that went up very little compared to the ones that dropped. Okay, so again, you see an advantage in the opposite direction if the numbers come in the opposite way. And again, you can check what happened in a shorter period of time. In the first 5 minutes, we're looking at only 3 pips movement approximately. Here's 2 pips here, and here's about 1 pip, and one of them went up. So 1 or 2 pips movement up or down in the first 5 minutes. And after 4 hours, 25 to 30 pips drop on 2 out of 3. Okay, so you can have an entire trading plan set up, distance to take profit, distance to stop loss. I'll trade within the first 5 minutes maybe after I see the numbers in the direction that the statistics say I should, if I can get the entry point I want. So it makes the trading plan very robotic and you can very much leave your emotions out of it and go by the data. Okay, so very powerful stuff here, very powerful tools, and you can see there are other announcements tomorrow coming in, also out of Great Britain, also out of Canada. I believe if we scroll down, there are some Canadian announcements here too that are high-level announcements. Okay, GDP numbers tend to have a good effect with the Canadian. And so you'll see similar statistics to what we looked at maybe with that as well. Okay, let me pause and see if there are any questions before we kind of wrap things up. Go ahead and type your questions if you have any or comments. Okay, so I don't see any questions popping up. I think this is a good place to stop. Give you some time to think about maybe if you can trade on some of those announcements that are to come in today still. And then also maybe plan out what you can do with tomorrow's announcements. And then take a look at that market buzz. Look at some instruments that you might have an idea that you'd want to trade on and see what the most recent news is coming in the market buzz. And also see if there's a trend analysis that you might agree with. And maybe you can plan out some trades that way. And some of them are active. You could look in the market buzz at things that are tradable now, not just the US stocks that I was clicking on, but you could be clicking on the stocks are only available when the market opens. So those US stocks will be tradable when the US market opens today for a shortened session. But you also could look at the commodities, crude oil, gold, etc. in the market buzz and read what the news is most recent on those, and also use our news feed for that. And trade on things that are active right now on the charts as well. And we do have the one trade that we got going, and it's early on, trying to overcome maybe the small spread that was on that trade. And we'll see. It's a ranging pattern, so I don't expect quick, rapid movements. We'll see if that works its way back down on that trade example. All right, everybody, thank you for joining. I appreciate it. Good luck with the trading the rest of the week. If you're celebrating the Thanksgiving holiday, happy holiday to you and happy Thanksgiving. And I'll be back at it next week with my next session being next Wednesday evening at 6 p.m. UK time. All right, bye for now. Take care.